Most real estate agents spend their career building something: a client base, a reputation, a business. And when it comes to their brokerage, they think about commission splits, they think about the fees that are involved, maybe revenue share. What they almost never think about is this: what happens to what I've built if I'm no longer here? At most brokerages, the answer is simple and a little brutal. It stops, the income ends, and whatever you built stays with that company. But Real Broker has a feature that changes that answer, and it's called Willable Revenue Share. And it might be one of the most meaningful and least talked about benefits in the entire model. Today, I'm going to explain exactly what it is, who qualifies, and how to set it up. I'm Josh with Real Estate Agent Success, and I make videos to help real estate agents make smarter decisions about their brokerage. If you find this useful, please subscribe so you don't miss future videos. Let's jump in. Before I explain the willable part, let me just make sure we're all on the same page about revenue share, because you need to understand the basics of what it is to appreciate what we're actually talking about here. At Real Broker, when you sponsor another agent to join the company, meaning you're the person who most influenced their decision to join Real, and you're listed in their ICA as their sponsor, you earn a percentage of the revenue that agent generates for Real on their transactions. So in Canada, that's 5% of Real's 15% cut on every single deal of your tier 1 agents. For an agent that fully caps, so you sponsored them in, they joined Real, they named you as their sponsor, and they cap, so they're on that 85-15 split until they pay into the Real brokerage $15,000. That can be up to $4,000 of that 15 that can be sent your way. And that's from every single agent that caps that you've sponsored directly. So sponsor enough agents, help them succeed, right? They have to be producing agents, not just agents that sell 1 or 2 houses. It's agents that are bringing money into the brokerage. That revenue share model compounds a lot, exponentially. And then you unlock additional tiers by having 5 or more producing agents in that tier 1. Tier 2 are, of course, agents that the agents you directly sponsored, they brought in. That's your tier 2. And this goes so on and so on. There's 5 tiers deep that can be unlocked. So it's a real meaningful income stream that runs alongside your sales business. And I've covered all of this and how it works in additional videos. You can just hit up the playlist below. Now, here's the part where most people don't know about. Revenue share is passive income that flows to you as long as you're active and producing at Real. But what happens when you pass away? That's the question that Willable Revenue Share answers. If you've been with Real at least 3 full calendar years, you can designate a beneficiary to continue receiving your revenue share payments after you're gone. Not a lump sum like an insurance payout. It's not a settlement. It's ongoing monthly revenue share income continuing to flow to someone that you've chosen. Real acknowledges this in the Willable Revenue Share Addendum. It's a formal agreement that you set up right inside your reason profile, and it specifies exactly who would receive your revenue share in the event of your passing. Think about what that actually means. If you spent several years at Real, building a network of agents, sponsoring good people, helping them succeed, unlocking tiers, you've created something with Real, ongoing financial value. Willable revenue share means that that value doesn't just evaporate the moment you're no longer here. You can direct it to your spouse, a family member, or even a trust. This is not something that exists at traditional brokerages. Your splits at conventional brokerages die when you do. This doesn't have to. So who can use this feature? Let's walk through the eligibility requirements. The main threshold is, again, 3 full calendar years with Real. Not 3 years since you joined, but 3 full calendar years of you being a producing agent. Once you've hit that mark, the feature becomes available to you, and you can designate your beneficiary at any time through the revenue share section of your reason profile. One important nuance is if you're part of a domestic team on your reason account, and that other team member is still alive when you pass, they automatically become the sponsor for your revenue share network, regardless of who you've named as your beneficiary. The beneficiary you've designated would only receive the revenue share payments once that surviving team member also passes, at which point it goes to whoever that surviving member designated. So if you're on a domestic team, this is worth thinking about carefully and potentially discussing even with a lawyer. A domestic team, again, is not just a team of 2 individuals. That's made up of like a spouse, husband and wife, a father and son, And it's because domestic teams only have one cap. They're just paying in the $15,000 Canadian, and they're essentially looked at as one entity in Real's eyes. Now, who can you actually name as your beneficiary? The short answer is it depends where you are. It depends on your province, on your state. And Real recommends to consult with a lawyer or an attorney to understand what's appropriate for your specific situation. And they're right to say that. This is genuinely something that touches estate planning, and getting proper legal advice is worth it. What I can tell you from the support documentation is that you have options. You can name an individual, a spouse, a child, a parent, a sibling, and importantly, you can also designate a trust as your beneficiary. When you're setting up your beneficiary information within Reason, you simply select Trust on the beneficiary information form. That trust option is something for anyone doing more comprehensive estate planning, because it means you could have your revenue share flow into a family trust structure rather than directly to an individual. Again, talk to a lawyer about estate planning and what makes sense for you and your situation, but the options are there. The actual setup is actually really straightforward and done entirely within Reason. Here's how it works. Log into Reason, go to your profile. In the revenue share section, you'll see an option to click Designate Beneficiary. Click that. A pop-up window appears. It says Sign Up, review the program agreement, and once you're happy with it, click I agree, and then Next. On the next screen, you'll enter your beneficiary information and click Designate. That's it. Once you've done that, you'll receive an email from Real with a link to view your Willable revenue share agreement, and you can find it at any time by going into Real's signature within Reason, clicking on the signed documents, and then just search for a revenue share addendum. And if your life circumstances change, you get married, you get divorced, you have children, or simply want to update who you've named, you can change your beneficiary at any point by going back into the revenue share section of the Reason profile that you have and clicking Change Beneficiary. It's not just a one-time only decision. It can be adjusted. So I just want to take a moment to put this in a broader context, because I think the significance of this feature, it really gets lost when you're just focused on day-to-day production. Real estate is a career where a lot of us are essentially self-employed. We don't have a company pension. We don't have an employer matching our retirement plan. We don't necessarily have life insurance through a workplace policy that protects your family's income if something happens to us. We build it all ourselves, or we don't have it. Willable revenue share is one piece of a bigger picture that Real has built for us, alongside stock awards, the stock purchase program, and Real retirement, that starts to create something closer to a long-term financial security for independent agents that just didn't exist before. It says that the work that you built in to building your network, to help grow Real and sponsoring great people and helping them succeed at Real also, that has value beyond the monthly payments that you receive right now. It has value that can carry forward. Now, I'm not a financial advisor, of course, and Willable revenue share alone isn't a retirement plan, but combined with everything else that Real has built into the model, it's worth understanding as part of how you think about long-term value of the brokerage that you're with. One thing that I just want to make sure before we wrap up is that if you were to leave Real, or if your license is terminated, you join another brokerage, your revenue share stops. And that would affect your beneficiary's ability to receive this Willable revenue share. So staying active with Real, leaving the company, of course, changes things. So to summarize, yes, you can name a beneficiary for your revenue share at Real broker. You need to have been with Real for at least 3 full calendar years. And once you qualify, you set up directly within your Reason profile under revenue share. You can name an individual or a trust. You can update your beneficiary at any time if your circumstances change. If you want to understand how revenue share works in full detail before getting to this point, how the tiers work and how you can realistically make a living and how much you can earn, how to sponsor agents, I have videos down in the playlist below. If you're still figuring out whether Real Broker Canada is the right move for you, or still trying to feel it out, feel free to click the link down below and we can set up a time to chat about what plugging your business into the model would look like.